Good morning, good afternoon, and good evening. Doc here from North America. It is TGIF. It is Friday. For some of you, it's probably Saturday. But it is Friday for me, and I am looking forward to the weekend. All right, now let's open this all up, see if anybody's on the chat line. You can see we're starting off right there as usual. Of late, I guess you could say even, of the dollar versus the Swiss. Let's get the fact check spreadsheet up there. There we go. Excellent. There we are. I can see us. Let me see if I can hear us.
Yep. Excellent.
Yeah. There it is. Okay,
There
good.
we are. I can see us.
Good. Okay. So now, let's see, where is it at? You can see the Swiss moving, I guess, down in J4X, yep. And you can see the white line trying to pierce. On Chicago, you can see let's see if we can highlight that. There we go. You see where it hit the downtrend, stopped, and you can see we've already pierced the zero line. So we are definitely going into the minus as we speak here. We'll see. You know, this marketplace. Oh, hey, middle age, how you doing? Sure, to see what gold looks like. Mercy. Now let's go to. There it is, right there. Just shifting over. Right there. There's gold. Let's widen that out a little bit. Yep, there we go. You see it's been real stalled, I guess, for weeks. We did get a nice run up. Was this the one we were looking at that we were thinking it was a reverse head and shoulders? Yeah, right there. So this is one side. I mean, it did one right here, a reverse head and shoulders, but then dipped again. Maybe this is the head, really. This is the other shoulder. You would think with all the calamity in our world, you would think that this product would be flying. So I hear you there. Let's see what it looks like on J4X. Right, let's see, where is it at? Right there. And looking at Chicago, you can see there, let's widen that a little bit more. Make it up close and personal. Now you can see here, they're trying to bounce with the J4X. There was a good bottom there about 3 days later. I noticed this can be a couple days behind that bounce, and then it starts to really take off. Sometimes it can be taking right off, like it did there. But that's interesting. Much higher low on the J4X. Same thing with Chicago Quant. I would say that, like I said, with the way the world is, you would have to think that it has to go higher. But then we've got quantitative easing, so what's the difference? That's what what I see too. An inverse head and shoulders. Yeah. It's really. Let me take a sip of water here. It's really hard to believe that this product, if it wasn't for, I have to take those words back. It's not hard to believe, solely because quantitative easing is the guiding post, I guess you could say, or the leader, or the direction, buyer of last resort, the seller of last resort. Quantitative easing, the Federal Reserves and the central banks don't want to see these metals really go anywhere. They'd like to see them stay calm. I mean, can you imagine Mr. Powell is trying to convince everybody that inflation is transitory. If gold had gone to 2,100 or 2,200, that would make a lot of money nervous. Money funds. When I say money, in my head I'm defining, hedge funds, mutual funds, retirement funds, pensions, so forth. It would make them very nervous. And so it's a lot easier. Not only does it make them nervous, let me digress. We've talked about this here many a time, and that is when these funds are incorporated, okay, they have to live by their manifesto of the incorporation. And so, to their magic sauce, I guess you could call it, their excitement of why do you put money into this one versus that one, pensions look at the manifesto. They look at the incorporation manifesto. And they say, oh, well, see, this will cover us if X, Y, and Z happens. And then the managers come in from that fund, and they go and talk to the pension funds and the mutual funds and the hedge funds and try to convince them to put money in, and so forth. And so they have to follow that manifesto that they've incorporated with. And so, or they'll get sued. It doesn't matter if they're making money or losing money. They'll get sued either way if they don't follow their incorporation. So, that's part of it. That is a big part of it. So, hey, Maxime 19, how you doing? Gold targeting 1505? I don't know. You is that what you think? 1505? Anything's possible. Remember the Federal Reserve and the central banks control this thing. If they needed to go down to 1505, they will. There's no doubt about that. If they needed to go to 2000, it will. They can drive this thing any way they want, until they can't. That's what it really comes down to. And right now, they can, and they will. And you ever see those days where someone comes in and sells 50,000 or 100,000 future contracts, and it drives the price down dramatically in a matter of minutes? Well, who do you think has the ability to do that? It sure isn't your normal hedge fund. If it was a normal hedge fund or some type of fund that did that, and we all know that there's no manufacturers that have the ability to sell 100,000 in a minute. There's no way in the world they're going to do that. They'd be fired in a heartbeat. So, who has the power to do that, Max? You know what I mean? Only the central banks. Only they can get away with that stuff. So that's why, if it goes to 1505, it's because the Federal Reserve wants it to go to 1505. I don't see any technical reason to believe that it's going there one way or the other. Only the central banks for their facade, their magic. This way Powell can walk around saying, transitory. It's transitory. How do you like that word? Transitory. Can you imagine? He started that mess in June, right? And I remember starting off saying, we'll wait till August and see how it goes. And Jackson Hole. And what did they do with Jackson Hole? They kicked the can down the road another month to September 22nd. So, here you got all of June, all of July, all of August, and now most of September before he has to actually answer anybody's question about transitory, Inflation is just transitory. Isn't it so cute? Oh my God, you can't make these up. You can't even invent that stuff, Hey, Robin. Yeah, we are transitory, exactly. When I get up to go to the kitchen and grab something to eat, I become transitory. Exactly. So, all right. So where do we go from here? Let's see. Let's take a look at. I'm trying to think what else to look at. Yeah. Okay. So that's where we were. Gold. Anybody else care to look at anything? If not, we'll go back to where were we? We were at we were at the Swiss, right? So we'll go back to Swiss and the currencies. Oh, what's Max say? Central banks. Correct, yeah. There is no entity on this planet that has that ability besides the central banks. I mean, there's no fund. I mean, there's just nothing like that. Not even remotely close. You know what I mean? No, nothing. Nobody. No one has that ability. None whatsoever. anyway, that's where I am with that. I find it to be incredibly entertaining, you know? And the fact that the financial networks like Bloomberg and CNBC and so forth, or Yahoo won't frame, that's the word I'm looking for, won't even frame it that way. That's the amazing part, you know, that honest conversation is not even, you know, it's not there. You know, that's the amazing part. Middle Age says, my target is 1900. Let's see how it plays out. Well, I imagine that, you know, there'll have to, you gotta, let's pretend that each one of us was Powell, you know, the chairman of the Federal Reserve, okay? All right, you're telling everybody in the world it's transitory, okay? So notice they seem to marry, it has been married now. Let's take a look when he said that. When he said that in June, okay? Let's go back and look in June and see where it was at that time. So there is, see, there's August, there's July, and there's June. So June it was at 1900. You know, playing around with the 19 and change. Right there, you can see that. Okay, so he comes out and he says it's transitory, right? And what's it do? It goes down in value from 1900 down to 1650, basically. Now let's take a look at it through Chicago Quant and just confirm, because remember that's Hinky Ashy, so that's an average more than it is an actual. So let's do this. So there's June, okay, right there. So we could write on there even. We could do that. Powell, we could put right here. We could say Powell, you know, just for the Powell. I think that's how they spell his name, I believe. Powell. Oh, what did I do wrong there? Let's try that again. Backspace. Shift P. P-O. There you go. Powell. And we're going to say trans. Okay. And we're going to label it as trans story. All right, like that. Okay. Let's make that white or something like that, so it sticks out in the dark. It makes it larger. There we go. So Powell comes out with his story, and you have that there. Okay. So we go down from the 19s down to, let's see, what was the low here? There's the low right there. And that shows to be 17 and change, 17, 18, so it's not the 16s, okay? Right there. So that's, so, you know, I mean, yeah, I mean, I could see reverse head and shoulders. Would he allow it? You know, I would kind of, look how it's tried to get up into this area a couple times since that low. So it tried to get up to the got up to the 1835. It got up to 1835 again, 1835. I would imagine 37 there. Here's a 36.9 right there. Right there is a 37.5. You know, a lower high. Boy, I wonder what the volume was like that day. But the Fed came in and slammed the daylights out of it. So yeah, I could see where you would think it should go up to 1900. I'd imagine. Here's another question. Does anybody think Powell can back his way out of that transitory philosophy? You know, as time goes on, time is working against them. So, I don't think anybody time can't, you know, can't do that. Now, at the same token, Maxine's thinking 1505, and you got to wonder, would that freak out the market in the sense of, you know, the investors? If we went after 1505, when's the last time we saw 1505? There is 1505 back in March of 2020. Okay? So, would that be too blatant? You know what I mean? Would that be too blatant if they went back down to 1505? Would that be too blatant of the Federal Reserve being, you know, too piggish, I guess you could say? They're being little piggly wigglies, you know? Let's see. Maxine says, gold main target is 2,300. In the meantime, it doesn't mean it will drop to 1,505. That's what the agreements and followed by handshakes that 1,505 is a target. Oh, okay. Yeah, so I think that would freak things out. Can you imagine? You know, we watch inflation with the way. Let's see this. Let's say this. If Mr. Biden fails at passing his $5 trillion bill, which is labeled in a name, it has a name. They call it 3.5 trillion, but it's really $5 trillion. If he fails at passing that, can gold go up again? Because I would assume that if he passes that, inflation is going to explode even greater. Okay? Now, if he doesn't pass it, you have to assume that inflation will just stay steady or start to drift a little bit down. Not a lot, but a little bit. And so, are we trapped now between, say, 1,900 and 1,500 for the next, until there's a new Fed chair? I'm still hearing stories that they don't want that. Like, in other words, last night I was hoping that he would nominate Powell. He was supposed to nominate Powell on Tuesday. Okay, I'm convinced that they're going to put like someone like Blinder in there, or some socialist in there. They're gonna find somebody like that. I'm convinced they are not reappointing Powell. I've been convinced about that for since he got elected. I'm totally convinced of that. So to me, I'm thinking that's the name of the game there. That's what's going on. I really do. I think that's what's going on. And so, as far as I'm concerned, what gold is, it's more like garnish on a plate. That's what it is. Like what was it? I think I read the Ukraine this morning voted to make cryptocurrencies legal as a tender or something like that. And now you have El Salvador and you have Ukraine doing it. And I look at it as an asset. I don't see it as a currency. I don't see Bitcoin as a currency, just like I don't see gold as a currency, like I don't see, soybeans as a currency. In other words, they're all equity. They're a form of asset. All of them are a form of asset. And you eat soybeans. You make different types of things from it. You wear gold or you trade it. And Bitcoin is a form of electronic asset. It's like an electronic gold. And so, my point is, I see gold as a like a warning light. It flashes red, or green or yellow at a highway or a spot or a warning. And so the central banks use it to control the psychological side of investing. Does that make sense? I think that makes sense. So gold is the psychological side of investing. That's why there's no conversation about it on the financial news networks. They're afraid to even discuss the idea. Inflation is, you would think that there'd be running like webinars and documentaries. Why is gold trading at $1,800 when inflation's at 8%? And we don't see any of that. They don't even discuss it. Or how does somebody go sell 50,000 contracts in a minute? Who does things like that? You never see a documentary on that. You see an article every so often about it. That's about it. And even now they try to even hide those articles. You don't even see them anymore. So, both of you have an interesting point. 1,900, 1,500. If it fits the narrative of the Federal Reserve, that's where it will go, without a doubt. And if we see inflation drop, from say 8 or 7 down to 4 or 5, who knows? Would it be smarter for the central bank to let gold rise, or would they want to try to knock it back down towards the 15s? I don't know. I would think they'd want to knock it down just to prove their point of that psychological factor that inflation is not a meaningful thing. Does that make sense to everybody? It seems like it's going to become our title today, I think, too. You know, gold is going to be the title of today's webinar, without a doubt. We went from, you know, Swiss franc, right, to this, you know, research and exploration of the metal sector. Have we gotten enough conversation about that? If so, we can always drift back to the currencies. We'll go from there. I'll let you guys figure that out by the chat line. If you don't say anything more, then I assume that you're satisfied with our question and thought that all of us have about the metal product. Like I said, I frame it in the sense of I don't understand. There is no supply and demand pressure on gold from anywhere but the Federal Reserve and the central banks, and it's a mental indicator. The world is not ready for 2,500. Oh yeah, can you imagine that? Wow, 2,500. I hear you. And you know, Max, you know, 19. You know, I just have to believe that it's really worth, at the low end, 3,000 personally. You know, there's no way in the world. I think you're low at 2,500, honestly. I think gold should be like anywhere between 3,000 and 5,000. And there should have been a fat finger. I said this yesterday or 2 days ago. There should have been a fat finger to 10,000. You know? Honestly. There should have been some type of, like, what was it? I have this one metal. It went to like $12,000 or $14,000 for a couple days. I forget what it's one of these industrial metals that disappear. It actually slowly evaporates over time, but I can't think of the name of it. But it, you know, when gold went to like 1,900, it went to like 10,000. Well, and you got to figure that the Federal Reserve was holding gold down at the time too. You have to. I mean, look, gold went to 1,900 and something, under 2,000, and then fell to 1,000. So you know that they've had their thumb on gold throughout this whole adventure. Definitely. So, all right. Yeah, 2,500. I think you're lowballing it. Honestly, I think gold should be at best, no, at worst. Gold right now should be $3,000 an ounce. Yeah. Yeah. You see, the world is not ready for 25. Yeah, I appreciate it. And in our dreams only. Yeah, exactly. I mean, no, I'd say in reality, when you look at all the lending and all the debt created and all the debt versus assets by many governments, and you know, all those hidden balance sheets and all that, gold should be between 3,000 and 5,000 an ounce, I would say. At least. And like I said, there should be a fat finger of like, you know, 9,800 or 11,200 or something like that happened at one point or another. You know, setting the stage for never to see again, like the $50 silver that we talked about and watched for since the Hunt brothers in the 70s. You know, it took this market and this calamity of the destruction of the financial system to get gold back, silver back to 51. So, all right, let's see. Let's jump back to, unless anybody wants to. If you guys want to see anything else, just point it out. If you want to go back to gold, point it out, and I'll go back to it. I'm going to switch over to. Let's cancel that now. I'm going to switch back over to the currencies, and we'll go back to. We'll go to the euro at this point. See where the euro is. I should see cable. We should look at cable too. Cable's really moving along there. Something's brewing over there, huh? And we'll look at the euro on Chicago Quant too at the same time. Nope, wrong page. There it is. Go to 2. There it is. And there's the euro. You see, euro is flatlining. Can't get through the daily buy, but is in that weekly buy now for a full third week. So that's kind of interesting there. Then at the same time, we have look at the cable. The cable's in a weekly sell, right? Oh no, look at that. It's flirting since this morning. Look at that. It's jumped up. Yeah, this morning it went out. It wasn't in that. So we're going to put the little circle in that now. So it looks like cable's finding a way to get up into the buy all of a sudden. Let's make that greenish. Right there. And at the same time, it is yesterday it just missed going into the buy by like, you know, minus 0.00013. It was really small. And today it's definitely through the daily buy with no problem right there. So it looks like if they keep it around here, it's obviously going to close in a daily buy. Yeah. GBP USD looks like a daily retracement. Daily retracement. Let's see. Let's take a look at that. You mean this low back on the 23rd, back in here, maybe? Is that what you're saying? Like, or you're looking for a retracement in it? Right now, it's definitely dancing in the direction that it wants to get going again. We were kind of surprised that it got down to the 136, but I kind of, or 1.36, but I think that combination. You know how I do this drawing on let me show you what I'm talking about there, Jordan. You see how I do this, where we have a channel for like the last year of the euro, and you can see that it flirts above it at times, but notice that it's not hitting the bottom like it used to. Whereas before, in the beginning of the establishment of this channel, it would go down, hit the bottom of the channel, and bounce back up again. Okay. Notice now it doesn't do that. It's drifted higher, so it's like a higher low of the channel. And at the same token, to like cross match that or describe that even more, look, you know, it did it here too. Let me just scrunch this up a little bit. Where's that mouse at? There it is. So it's kind of changed its dimension a little bit and we assume that this is the central bank's doing it. And then when we go back and look at the Swiss, it moves the same way in a sense. In other words, it's developed instead of the red channel that we have there. So we can squinch this up. See that channel there? It's kind of changed itself. It seems to have altered itself in some way, and we got this flag or expanding flag pattern, you know, that we identified about a month and a half ago back. And, you know, like right here, I guess it is, back in early August. And you can see, you know, this last move just bounced off of it again. And it supported itself here back in late July, going back into that. See it right there. So, yeah, is that what you mean by the GBP looks like a daily retracement? In a Fibonacci way, or let's go back to that. Let's take a look at that, and let's scrunch that up too to get a more broader visual. So it's retracing back up in a Fibonacci way from this low here, and you know we had a box set up around it here. You see that there? Seems like, you know, it's been bouncing between the 38 and the 40 in this product for a while, and then you know, from back here in February, and it played that range for a while. Then it, you know, this last month and a half, 2 months, it played the 36, which was a little surprising after 8 months of doing the other. And then you're saying that it's like a retracement up off of the lows from the July. Yeah, okay, yeah, right, exactly. To me, I agree with you too. Yeah, I see the same thing. I see that retracement thing going on. The question is, I think it's going to come back to at least the 40s, the mid 40 to 42, like right in here, solely because it drifted past the 30. Was that the 37, the high 37s? You know, I think that because of that, and it went down to the 36. I kind of think that's got something to do with the way the central banks are keeping these things in a channel or a range. You know, they've been doing that for like 12, 13 years now. They keep them in certain ranges, and then they allow them to adjust probably to GDP of their country. And I mean, I'm sure there's a madness. There's probably logic to their madness at the central banks and the Federal Reserve. They must be doing something that justifies it all in the end. Yeah. So yeah, I agree with you. And I guess we could take a look at that too. Let's look at what Jordan's looking at here. Like that. I guess you go to here, to the 42s, right? Let's see if we can bring this over a little bit more. Yeah, so we go with that there. See, we move this down for a moment, like that. And we'll move this down like that. And then let's widen it out and look at that bounce that's going on. So it cuts through the, what is that? That's the 760. The extreme brings it up to the 50 percentile, which is interesting. There's the green line is the 50 percentile right there. And it gets through that. Look how well it perfectly stops at the, there it is right there, the was that the 0.38. The yellow line is a 0.38. And so look how perfectly it stops there. So it plays with the 3.8 right there, or I guess a 0.62 off the low. You can consider it the 0.62 right up to there. Comes back down to the 50, bounces back up to the 0.62 again, then it hesitates for a week on the 50 and starts to play itself down. For a couple days it sits on the 0.38, there's the 0.38, and then it almost retraces back but fails, and so you have a lower high compared to there. No, a higher low, I'm sorry, a higher low. And then it goes and hesitates again on the 0.38 for a week, almost 2 weeks. Oh, I'm sorry. For almost 2 weeks right here, you can see this thing. Let's do it like this. So you can see from there, in there, it sits on that, in that area, right? Then it, obviously, it climbs up almost perfectly to the 50, right there. Stalls out just very mildly. Comes back down, tests the 3.8 again, or plays to the 3.8, however you want to verbally describe that. And then comes back up to the, heading back to the 50 again. Nice, Jordan. Nice. I didn't look at it that way at all. That looks really good. Thank you. Still need to learn more about corrective pattern. Yeah, don't we all? I hear you in there. I hear you. Well, corrective pattern, I guess, let's see. How do we define a corrective pattern to begin with? How do we, in other words, how do we try to describe it and explain it? I guess what happens is that in the nature of the Fibonacci sequence, here, well, let me digress a little bit here. We used to have a fellow, and I did talk to him just recently, Janesh. Janesh used to do a, what did he do? He did a webinar for Dukascopy. Did it a long time. Fundamental, a Canadian fellow. Janesh is, I think he's living in Thailand now, but he was raised and born in Canada. And he works out of Canada throughout many years, and then he moved over to Thailand for, whatever beneficial opportunity there was there or whatever. And so, he looks at my math here. Let's do this. Let's look at the Fibonacci sequence with my math. Remember, my math is a little ahead of the Fibonacci sequence. So in other words, it comes down and creates a low here, okay? And then obviously you can look at the J4X the same way. What is that? That is, what are we looking at? We're looking at cable, right? So let's put cable into J4X. Right there. So I bet this low will coordinate on the J4X with the fast and slow coming to a bottom. And when is that? That was 7/20, so it was in July. And so you can see here in July, there's August. So you can see here it basically coordinates right there. See the low right there? See? Right there, the low. And when it pierces, it starts to move up and you get your strength, right? Just like here, let's see if we can do this. So just like in here, you can see the same thing with our math. It starts to coordinate. Now it gets up and hits that resistance area. So if you combine together, I guess if you combine together Fibonacci with my J4X formula or with my Chicago quant, it makes it all coordinate. Now Janash told me he was doing that. He was coordinating that stuff for like a year or so, I don't know. And so, and then over time we got he got involved in other things. But he's obviously in the trading universe, so you can look him up. Look on Dukascopy back in the old days, a couple years ago, 3 or 4 years ago. Janash has a couple years of webinars on there. It may be worth for you to tune into seeing some of the old videos of Janash. Janash, may have mentioned stuff like that. And he was also using fundamentals at the same time, combining the fundamentals with with my math. So maybe that might help out. Hope that makes some sense there, I think today's title is going to be like gold and the Fed and Fibonacci and GBP. That's going to be a monster title we could use today. Honestly. Let's see, gold, gold, Fed and gold, and GBP and Fibonacci. I think that's the title today, really, because this is very fascinating. This is a very fascinating subject. I rarely talk about it. I use it, honestly, I do. I use it to trade. I really do. I use this combination of stuff. I just never really think about it because I've been doing it for, 3 decades, 4 decades. I've been doing it for 40 years. So I never really have this conversation out loud. But Jordan, what you've done is you've brought up a subject that's well worth having a conversation about, because it is a really good tool. When you combine together, the J4X and the Fibonacci, or the J4X and my work, it makes it work real well. Notice how you get the resistance stuff going on in here, right? And then what do you see here? You see, this stalling out at the 6.2. And then you can see it breaking down. You can see low, bringing in but a higher low here. And you can see it stalling out underneath the 50 percentile. You can see our work trying to turn down again. And so you have to believe that, you want to be more short here, not long, following the daily signals and so forth. So, real good there, Jordan. Way to go. Well, good way to bring some important subject matter into the webinar. Nice job. So that's how this webinar works, and it's so much more fun when traders like yourselves get involved and start to talk. It's not that you're asking a question as much as you're making an interesting statement or a statement, and then we go explore the idea together and see if we have as I always say, there are no stupid questions in trading and money. There are only short answers or long answers. And obviously this has become a longer answer because it's there to be had, Take care. Peace out, 19. Peace out. That's what we used to say in the 60s. Peace out. Yes, indeed. That meant you were leaving. Peace out. Peace. Yeah. And we would raise our fist or something like that. Or, with the fingers and so forth. So, have a safe and smart weekend there, 19. I think that's really good, Jordan. We've landed there. So, and then we're still on the currency side of this conversation. And that is that we're seeing more strength at the moment in the cable, that's that correction thing going on, and at the same time, it's looking much better than all the other products. So I wonder what's going on there. I don't know. I guess there's a reason behind it all, but we see our math is ahead of it. We're seeing, this thing flirt with a weekly buy. I'm going to take a sip of water. Where's my water? There it is. You see we're flirting with a weekly buy. We're flirting with a daily buy. So obviously money is coming back into this thing. All right. From there, we're going to run over to the Turkish Lira. But again, traders, if you see something you want to look at, let's do it. Let's do it. Now look at that. A little weakness in here the last day. You see that? But we do widen something. But we're still in the weekly sell on the dollar Turkish Lira. So no real big change. That was just like that hump here, right there that occurred back in early August. We got another nice one there. And I wonder if this thing's going to roll over. When we get into a daily sell and we're in a weekly sell, look down, not up. And then let's go over to the Euro Turkish Lira. Right there. And you can see here, same situation except for this joined in days ahead of time. And it tried to fight its way back up to what we would think was a fat finger, and now we're convinced it was not. It was just real demand at the moment. There was definitely a big player moving in and out of that currency. And so there's the Turkish Lira. And then we swing by CAD. You can see CAD is trying to play with its daily sell there today. It is still in the weekly buy, but we got the super of the 5. Of the 3-5 trying to aim down even more and more. Wonder if that's going to finally put the weekly into a sell next week, which you would think then is telling us that maybe the oil complex is trying to move up or the gold complex is trying to move up, right? I mean, that's usually the way that works. So, which kind of plays into that idea. Maybe they're going to go back to the 1837, 38. Maybe they go play the 19. Who knows? I doubt they'll play the 19 just solely, like I said, I think they're terrified of looking like inflation is actually real. Just saying that out loud is crazy. Oh my God. And it makes me laugh inside, Anyhow, yeah, it's like as if inflation is real. Oh my God. No, it's transitory. Okay, and so that's where we are there with the Canadian. And let's take a look at now we jump over to the metal complex again. Oh, let's just double check on J4X too, what the Canadian looks like. Right there. Yeah, daddy. So there's the CAD. And you can see it's trying to roll over just like we are doing on Chicago. So everything's moving along fine right there. And we even have a red hinky, which is really cool because we have a red dot. So that is even cooler. All right. Now what we'll do is we're assuming because of this weakness, we would assume that crude oil is moving up in value. So we'll slide over to the crude complex again. And there's the gold, and gold should be moving up, and it looks like it's moving up. It's hard to say, but you can see gold should be moving up, and it does have that look like it is moving up. Let's widen that a little bit, like so, and then move it over like so. It does seem like it's trying, but it is down for the day, unfortunately. And then we should see crude oil. That should be moving up, and we do have a little daily buy thing going on in there. Let's give that a refresh on the Control R just to double check it. There we are. Yeah. So gold, oil, black gold is moving up. So at least 1 out of 2 are doing their thing. Again, we have to assume that the Federal Reserve is really, pressuring it. I would have to assume that's what's really going on. All right. Then from here we drift back to the South African Rand. which means we have to shift into this. Back to that. There we are. And we'll go look at the South African Rand. I know it's around here somewhere. Nothing up my sleeve. There it is. And that's doing what it should be doing. It's trying to tell us that gold is trying to go up in value. That's what it keeps on telling us. And you know, since this bottom here on was that August 20th, let's take a look at let's look at it on J4X. Let's look at August 20th in gold. Let's try that again. So basically, August 20th is right around. I guess like right around in here somewhere. And you can see, I guess it was catching some. This is June, and so I guess there's the beginning of July. You gotta imagine 20th is right around here. It tried to stay up for a couple weeks, like 3 weeks or so, but then, you know, failed and fell down. Again, it has to be the transitory conversation, really. That's what it really comes down to for Mr. Powell. Just looking it up, correcting pattern maybe it's a flat, Elliott, flat. Yeah, right. It's they have a couple names for that. A resting spot. Some of the guys in New York used to call it a resting spot, where it's resting like sleeping. Some call it a flag. Some call it a channel. You know, you have a descending and ascending channel. Descending going down, ascending going up. Yeah, there's a lot of different things there. It usually is I call it a digestion. Like it's like you ate something, now you're letting it digest in your stomach, so you're not so full after a while. And then it takes off again. You go eat again, and then the body has to, you know, do whatever it does. So, yeah, that's good. Yeah, a correction. And Elliott wave, you have two corrections normally. You have which are minor trends. So, you know, when the major trend in Elliott is going up, you know, one is the main thrust, then it corrects, that's the 2 down, which is small, and then a 3 up, which is supposed to be the longest or the second longest of the 3 major trends. Then you get a 4, which should not pierce the top of the 1. Okay? And then, you know, it shouldn't go as low as that, but people usually Fibonacci that once they start to identify it down to the 1. And so then you get a bounce of the 4, which is supposed to look different than the 2. And then those 2 corrections are supposed to look different. They're supposed to act different. And then you got the 5, which can, in many ways, look more like a 3 wave more than a 5 wave in modern era because of the speed of information. And the 5 should be as long as the 3 or shorter, and the 3 should be the most lengthiest of all, and that's the Elliott wave, exactly. And then you have an ABC correction again to do it all over again, or you have an extending 5, you know, that type of thing. Hey Douglas, how you doing? Morning. TGIF, thank goodness it's Friday. Woo! So, yeah, that's, you know, it's well worth reading. Matter of fact, Jordan, I have a recommendation for you. Was it John? Is it John Murphy? Yeah, John Murphy's technical analysis book. It's it's probably the most encompassing technical analysis book in that's been written. And there's probably like the late great John Murphy, who was on a technician for some major brokerage houses like E.F. Hutton and so forth, and Shearson maybe, and then he had a TV show on FNN, which merged with CNBC back in the 90s. So John Murphy's book is well worth looking into. Jordan, definitely well worth looking into. All right, we've had some really great conversation here, Douglas. You might want to watch, if you didn't watch this earlier, you want to rewatch this webinar, because we did the Federal Reserve and gold in the first 25 minutes, and we did cable and Fibonacci and my math and my J4X indicator in the second part for about 15-20 minutes. So this has been a fun webinar today of technical analysis. Definitely, it's been a great joint effort between a lot of traders. The conversation has been just outstanding, It really has. So you definitely want to tune into that. Well, you'll definitely want to watch that. Matter of fact, I use I use every day for almost like 35, 40 years now. What I talk about in the British pound, Fibonacci, my research, and now you can also use the J4X indicator that I display every day, and it's a really good tool. That I don't know anything about it. Carlin Borden. Let me look them up. I don't know anything about them. I don't know them. Carlin Borden. Or Carlene, is it? That sounds like, let's see, paste. Yeah, it's a woman, right? Yeah, I don't know much about her, but I'm trying to see if she's part of a tour. I have a friend that there's a bunch of women involved in trading for a long time, and they really have established themselves nicely in it. They do this Vegas stuff and so forth, and I'm trying to think of like there's a lead woman that I traded with on the trading floor back in the 80s. Resky. And I can't think of her first name out of nowhere. They were at my wedding. Yeah, there's a group of women that do a lot of technical analysis. I don't know this woman in particular, but I think she's part of that group that does like the Vegas stuff and so forth. They do a lot of conferences. They're into it. They're really good at it too. So sounds good. Sounds good. I'm glad you got somebody that's involved. So let me think. What else is there? That's a good one. Don't know much of her work. I think I'll try to take a look at it and see what she says. I'll watch a couple of videos or something like that and see what she's saying about Fibonacci. It's always interesting to see how other people use Fibonacci. Let's see, what else we got going? Anything else going on here? We got a few more minutes. We can talk about a few more things before the U.S. markets really open up, rolling along, Where are we at? Oh, so where did we leave off? We were looking at the South African Rand, and that's kind of trying to tell us that gold is still showing strength. They're anticipating it. I guess they're anticipating ahead of the Federal Reserve giving up on fooling with it. Maybe, I don't know. And then we go over to the ruble, which went into a daily sell yesterday. And you can see a little bit of pressure on it now. Still in that weekly sell. We'll do a run and gun on the other currencies. Here's the yen. Yen slid into a daily sell yesterday. Still in a weekly sell. That's been pressured for 6-7 weeks now on the downside, but not really going too far. And then the last one is the Mexican peso. Right there. See, I get all the currencies in still. I can have a 50-minute conversation about about two different subjects and still get all the currencies done, and everybody gets a chance to see the pairs trades that we look at every day. And you can see here, it's still moving down. We're in a weekly sell. You can see we're at the lows of the week now today. And you can see that it's going into a daily sell as we speak. And let's take a look at that on J4X too. Right there. Yeah, let's see what else I got brewing here. I'm doing pretty good so far. And so there we've cleaned up all the currencies. And then let's just take a look at silver and platinum and so forth real quick. Let's see, where do we go? Not there. Let me close that. No, I'm not going to close it until the end of the webinar at this point. Let's go over to here. And let's go back to, let's see what silver looks like. It looks like it might be closing in a weekly buy this week, silver. Look at that. It's still up by the hair of its chinny chin chin. See right there? It is plus by the hair of its chinny chin, 0.01 by 1 penny. It's trying. It's holding up. It's a battle. You know, it's really trying to stay in the weekly buy. Let's see if it does anything there. You know, we've noticed that this currency is also this metal is being bought. Let's see what platinum looks like. Platinum trying to climb into the daily buy, but not the weekly. So not totally going on there. You got to figure the Fed is using it to bang the other metals in some way or another. So they buy gold, they're shorting platinum, I guess. And same thing, buying silver, shorting platinum. Now, let's jump over to the stock indices real quick. There's the Nasdaq. Nasdaq is fighting to try to get back into the daily buy. And it's staying in that weekly buy right there. Then there's the S&P 500. It's fighting to get back into the daily buy. It's staying in a weekly buy. And then we have the Dow Jones Industrial Average right there. It is flirting with the weekly sell. This is going to be a horse race today. And it's trying to get back into the daily buy after, what's that? 1, 2, 3, 4, 5, 6. 6 full days in a daily sell. And it fell down from the 35,375 high down to the 34,831. So we moved over 500 points down in the Dow, and now it's perking its head back up again. So there we go. Jordan, I really like this book, Fibonacci Trading by Caroline. I wish I got it earlier, only about halfway at the moment. Hey, you know, just go forward with it. That's all. Take it slow and steady. Remember, you're dealing with money and trading, so take it slow. The most important thing is to get your tools working right. Remember, that's the real key there. You know, paper trade it. You know, do so forth and so on. Simulation trade it. Try to get your tools working right so that you have confidence to trade consistently the way you want to trade that makes money. You know, what you've developed. Make sense there? All right, traders. This is Doc from North America. Everybody have a safe and smart weekend. We will catch you on the flip side. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta.